Today on the XDC show, we are joined by Raze Finance, Billy from the XDC Foundation, and Plug and Play. A massive announcement that just came out recently, building off of the Plug and Play XDC Real World Asset Accelerator. Raze announced they have launched or are launching institutional grade real world asset backed vaults on XDC, built to harness and support the flow of USD liquidity on chain. And huge focus for RWAs here. This is a huge win for the network as well. I'm going to kind of kick off. Full disclosure, Genfinity is supported by the XDC Foundation. None of this is financial advice, but guest of honor here, which we've never had on, is Brian. Brian from Raze. If you could give us an intro of yourself and maybe just talk about what this announcement represents for Raze as an entity here and how you guys are building real stablecoin solutions for real world assets.
Yeah, thanks for having me, guys. Yeah, I mean, we're super excited about the announcement, and particularly our product that we are purpose built on XDC. So we've hence called it Raze on XDC. A little bit of background on myself. I've been in enterprise software for like 23, 24 years, startups, raising capital, you name it. We've got an incredible team behind me that has had everything from capital markets experience, several decades, being a part of a broker dealer, been in blockchain for 7 to 10 years. Most of the guys have, a great product team. So we've got a world-class team that we've got and we're building to take this thing to the next level. What really at the end of the day, why this is such a big deal for us is that, we look at the XDC network, a layer one enterprise grade chain, as not just a technology stack, but as a global distribution point for liquidity and access. Most people forget that if you're not in stable coins, you are not touching things like what we put on chain, right? And it seems like such an obvious statement, but you cannot offer regulated products to somebody on chain if something is not currently denominated in a USDC based kind of offering, and that's really what we went after. So ultimately, Raze is built a compliant platform for not just bringing these off-chain assets to on-chain infrastructure, but also opening up a marketplace and an opportunity for stablecoin investors to participate in this stuff at any level, lower minimums and global offerings, including the United States. So we're pretty excited about this. We're excited to be a part of the XDC network and certainly partners with Plug and Play as well.
I want to ask Billy, because I know this is, and we'll move back to Raze here in a second as well, but just as we kind of kick off intros, this is a lot of work kind of coming to fruition here and kind of like a cornerstone integration within the XDC network, which is pretty awesome as well. Can you give us kind of the background and just high level what this represents for the network and why you're excited about it?
Yeah, absolutely. Well, we've done this a lot, right? So it's as most people probably do know about us, we've been working in the RWA space for basically the last 5 years, working to bring issuances on the network. And I think the shift that we have really seen was where people were coming as issuers. Eventually, it really became those RWA platforms that allow you to do the tokenization that really were the key. And so a lot of this really started to happen when we really got together with Plug and Play. And we started looking at what we wanted to do around an RWA ecosystem and really bring platforms to the network that could bring about the tokenization that we've really been working towards. And, we've traditionally been trade finance focused, and that's still, the cornerstone of what we are as a network. But the ability to tokenize assets and also tokenize assets or bring a vault like Raze is doing to the network where we're actually bringing real world applications to SMEs, not from an accounts, receivable financing necessarily perspective, which is some of the directions we've really focused on, a main direction, but the ability to go in, and this is really to the credit to Brian and his team, which I thought was really just one of the things that's so strong about Raze is their ability to understand what companies need to do in order to bring an issuance, to the network and to their platform, so that there's something that in the real world is generating yield. It's not just something that's made up, like, oh, we want to bring somebody on chain, we want to just tokenize something, and we're going to start paying out a yield, and it's not really necessarily based in anything. Like, these are real sustainable yields, real issuances, real companies, and that's actually a very, very rare thing to see in this space. So when we got connected with Raze, we joke about that. I always say this, like, this is like you got your peanut butter and my chocolate moment for us. And it was really the same thing, I think, for Raze is, we realized that, we've been looking for what each of us were doing. And together, we're now able to really, kind of put a cornerstone piece into this ecosystem that's going to allow us to do the tokenization, and not only that, have the vaults that allow other tokenization platforms to really work with Raze. So it's really a huge ecosystem play. It's a very positive move, I think, for us, and I can't say enough about what Raze has really put together here. And this is, I kind of refer to it as tokenization 2.0 at this point. We're doing what's real. We're working on bringing, all of the tools necessary that Raze needs and others, and into the ecosystem, attestation and other things, auditing and all of the things that are like risk level issues or concerns that traditional finance has, and coming on chain. And these are all things we're working on together. And so it's a very, very big moment, I think, for us. And so we're really excited about it. Yeah.
Max, I know from plug and play standpoint, maybe just give us high level what working with a Raze looks like from plug and play standpoint, and then I want to move it back to I guess Raze more directly here. And thank you for joining again, Max. We've had you on a bunch of times. It's always great to see you again. It's awesome. Thanks.
Yeah, thanks for having me. So obviously we kicked off this partnership with XDC close to 2 years ago now, and we've gone through 2 cohorts. We're on our third. And in the second cohort, Raze really stood out as one of the top tier solutions for bringing institutional liquidity to the network. And so, we host 100 plus events per year globally that brings together VC firms, academia, large Fortune 500 customers, which we service on innovation needs, and really kind of drills down on what are their, next kind of innovation areas or areas of exploration. And we've been hearing more and more around tokenization, stablecoins, and so it really made sense that we have a solution now within our network that is perfectly marrying those 2 concepts, and really, I think Raze impressed a lot of our judges, a lot of our corporates, a lot of our VCs, and so we're kicking off, this kind of series where we can go into traditional, asset managers, asset allocators, family office, high net worth individual type events, and really kind of highlight, number one, the benefits of having, capital in stablecoins. Obviously, everyone knows the talk track there, 24/7, 365 type liquidity. Also, the yield bearing capabilities of stablecoins. Obviously, we're still holding our breath to see what clarity and the Clarity Act will really kind of come to light there. Obviously, there's a big discussion happening between banks and regulators, but kicking off first off to showcase, what having stable coins can do for the management of a portfolio as an asset manager. But secondly, showcasing that there are real solutions out there when it comes to RWAs, and tokenization. And I think Raze kind of, like I said, marries the two really, really nicely. And so we're kicking off actually tomorrow. We'll have an event in Miami where we are expecting upwards of 200 plus attendees coming from that same realm of asset managers, asset allocators, and obviously, the big conference that's occurring is Uncorrelated. And so we're bringing a lot of those folks over to a private venue that we've secured. And we'll be, obviously talking about some of the work that Raze is doing in this space. They have a couple of really, really interesting products on their marketplace. And so, ultimately it's education, but now we actually have a solution to put in front of these different types of individuals. So we're really excited to kick things off and see kind of what comes out of this, because it's kind of the thesis here that there has been a gap in the market. And so being able to really move forward with Raze and XDC is going to be a great kind of first step. It also allows us to iterate and constantly, hear from potential clients on what they're looking for. I think the fact that you're going to be receiving that yield in stablecoins is a huge kind of groundbreaking development for this area of finance. So we're excited to kick things off tomorrow. And if you're in Miami, I guess reach out to any one of us, and we'd love to see you at the event.
So I want to ask Brian. So just to kind of reiterate what was announced here, I think it was just a few days ago, full platform integration with XDC, obviously strategic alliance with XDC Foundation, and as Max mentioned, compliant yield destination for USDC holders. I would love, Brian, if you could kind of paint the picture for us as far as what the opportunity is here, with stablecoins kind of being at the core for tokenized capital markets, because I think you can look at some of these numbers, and to somebody that might not be super familiar with finance or blockchain or this space, they look like big numbers. But I'm sure everybody on this call will tell me that the real opportunity is absolutely massive. And we are just kind of at the forefront of this, especially when it comes to doing this correctly, compliantly, and stablecoin in, stablecoin out type of a platform. But Brian, I'd love if you could walk us through where we're at right now.
Yeah, I think that one of the things that shocked me for like the last year and a half or maybe 2 years was all the talk around RWAs and the hope around that narrative. I think 2025 was really the year of RWAs. But what was stunning to me is the only real RWAs that existed were tokenizing existing funds like BlackRock and taking, household names without naming them all and like spinning them up and putting roller skates on them and saying, hey, we now have a tokenized offering. But all the other RWA projects, and I'm not saying that there's none. There's a lot of really solid, super, like pure DeFi platforms out there that we all love in the industry. But that's what they are. They're pure DeFi, and they're typically backed by synthetic yield opportunities, backed by other crypto assets. And that can be great for crypto investors. But, we're not talking about borrowing against your Bitcoin. We're talking about taking something that exists in the real world, whether it's a real estate project that is generating yield, or a commodities deal, or, private credit and debt, which is really the hot thing in our market right now, because it generates cash flow. And saying, how do you take something like that that's currently not at all on chain and turn it into something to where not only it pays a consistent distribution, but it takes advantage of all of the crypto technology that we all love: decentralization, instant settlement, stablecoin interaction, and all that stuff, without overcomplicating it. And what we've seen over the years is one of two approaches: either the asset really isn't real, or it is so real and it is so highly regulated that no one in crypto is touching it, because it's just so freaking high friction to even get on there, and it doesn't make any sense. And then the other complaint I had over the last year and a half is that most of the platforms out there, or most of the experiences you had to first buy the native token of that protocol, and then you could invest in an RWA. And by the time you got your yield back, it was in that native token, and you're screwed because you're not actually making any money, and because of the volatility of those markets. So we just kind of took a much simpler approach even before we met XDC, and that's why there's like this kind of perfect aha moment when we came together last year, which was like, hey, we're just trying to keep this simple, and it's a very hard thing to take an off-chain asset owner or an issuer that has these real projects and these real cash flowing assets and restructure them in a way to where you have a novel product. And that's the key. Like, what's Wall Street really good at? They're good at selling new stuff to their end users, to their product consumers, right? Wall Street knows how to restructure things, respin things. And ultimately, there's a lot of that at play right now going on, where you have to have a new product and a new novel approach to how you're going to take something that's traditional and then bring it on what we call on-chain. So we took that approach and we said, okay, let's keep the asset what it is. Let's try not to make the owner, the issuer, do a ton of hoops, spend a lot of money on legal. Let's do all that stuff for them. And let's give them the option to issue out of BVI or somewhere outside the US for non-US investors. Or if they can issue inside the United States because they're a US company or a US fund, they can do that too, and we can support both use cases. So that was the first premise. Make sure it's compliant, make sure we can do things like Reg D and Reg S issuances, et cetera. And then the next step was, what's the user experience? Like, how can they actually invest? And the key was, it's got to be based on stablecoins and nothing else. And that proved to be a lot more challenging for the market to like pull off, because if you can't figure out how to make money interacting with stablecoins, you're back to the crypto thing of trying to issue a token and integrate it, et cetera, and make all these complicated loops. So we've done that. And if you want to earn 8, 10, 20% APY backed on real assets, you have to bring USDC. The good thing is that if you stake, and that's what we built, is a staking-like experience with vaults, you will earn back a daily yield paid out either monthly or quarterly in USDC. Imagine that concept. But that's really all you have to do to meet the demand of what stablecoin holders are looking for right now, which is stability and consistency.
So you mentioned vaults. Can you maybe talk a little bit about Vault as a service and how that works? You mentioned what they're, some of these stablecoin denominated vaults are backed by. So maybe some of the assets that we haven't seen come into the space as much as we'd like, private credit, structured debt, commodities, but removing that complexity. Just maybe walk us through what that vault as a service looks like.
Yeah, so a vault at the core sense is just a smart contract, and we took that concept. We're not, we didn't invent the vault concept on chain. There's many other players out there that have deployed different type of vault structures. But what we took the approach of is we want the user to have a staking experience. We want them to be able to stake their USDC, and in return, they receive a vault token, which serves as their receipt. It does really represent the security as well. These are all securities. We don't make any bones about it. Like that, this is just how it works. And most markets, I should say, they're treated as securities, certainly the US. And the vault essentially does all the work. So it's fully decentralized. So what happens is when you make that investment, the vault actually takes the capital, the USDC, from the investor's wallet, regardless of what that wallet is, whether it's a Fireblocks wallet or a Coinbase wallet or MetaMask, transfers that USDC not to Raze, because we don't hold custody. It actually transfers it directly to the customer, to the issuer, or to the fund, whoever's actually doing this on our platform. They then take that USDC and they put it to work, either on-chain or off-chain. Typically, they're going to convert it to fiat, put it to work, do what their business is, whether it's lending it out, whether it's putting it to a commodities kind of production operation for operational use, whatever that is. And then they have to keep the redemption wallet funded. And our smart contract does all the calculations, gives a nice portfolio view to the investor, And while they're waiting, they're yielding. And then when that lockup term expires, like any staking contract, they receive automatically their distribution back to their wallet. It can either be principal in yield or just their yield paid back to them, depending on the issuance. Now, the key is that that capital is not being stuck in a smart contract that can be hacked. It's not being locked up in perpetuity. It's not being locked up in some high risk, protocol that may go under. It's literally going to the legal entity that's actually allowing you to invest into them. And so that's about as traditional as you get, but on chain.
I think it's awesome. And I'm glad that I clicked on this. You got the nice Raze on XDC logo up in the top left there, Billy, too. I want to ask you, Billy, because I think, what we're hearing a lot of like kind of stable coins, and I actually kind of agree with this, where stable coins are one of the missing links for mass adoption, because people are kind of used to using their money digitally right now. Stable coins are kind of the bridge between this space and the traditional. But from the XDC Network's purview, you guys made a lot of headway last year. So native USDC on XDC Network.
Yep.
Forgive me if I get the acronym wrong, but CCTB, whatever Circle's cross-chain
Yep.
interoperability aspect is.
Yep.
But Billy, talk about that and how it's almost like there's this flywheel effect of things that are kind of happening in the background, and then we have a cornerstone platform like this kind of coming out of the back end of that. So, but Billy, I'll keep rambling.
Well, look, it's a major feather in the cap for us in terms of being able to bring native USDC on chain, for the network. It's a cornerstone piece for what's really needed and the things that you're trying to do with bringing, fiat onto the network. So, Brian and I were actually having this conversation yesterday, and that there's in the adoption of stables. The challenge has always been, what do I do with it when I have my stables? And this is where we feel like Raze is the solution for that. It's the first line of a solution where you're now able to bring capital efficiency to the network through other methods to, you can borrow against the asset, you can, loop it, it's true composability at its best for tokenization. But really what Circle and Native Circle allows us to do is, one, have corporate partners be able to, at essentially no cost, bring their US dollars into a stablecoin on the network. And that's been a huge barrier. People probably don't really understand this to the extent of, because a lot of people look at, who are in the crypto space, maybe look from the outside looking in, thinking, oh, all of these things are happening. But in order for them to happen, you have to eliminate the barriers and the friction that goes on from getting on chain. And that's really, really critical. So you can even see with just reactions to what's happening with the Clarity Act, as Max brought up earlier, as to, there's this it's a real roller coaster right now, I think, for the industry to, we need that clarity. I mean, there's a reason the name is Clarity Act. Right now it's unclarity about what's happening with it. So, I think that the USDC piece and the stable piece is really critical. And the way that really works is, Circle has put together, their essential network of movement of USDC. So, within it, when you're native, you can go from any chain easily, that is native, from one chain to another. So, and I do believe that the future of what happens within the industry is that, there will be money that moves from chain to chain. And that's a sign of a very healthy industry. The key is to build the types of products that you draw people to your network, so that they bring their USDC there and have an opportunity to use it. And that's a big push in which we've been making. So kind of the underlying piece of this has been aligning independent entities and people who have been building on the network, or corporate strategic partnerships, or whatever you want to call them, anybody that you're really trying to bring into the fold, to get them connected with the different types of services that allow them to have it happen. So Fireblocks being critical to that, from a custody perspective, the ability to be able to have accounts where these corporate partners can set up with Circle and they can easily change into USDC, and then you can easily move into these products. And I think like what Brian was talking about with the issuances that are on. The thing that really a lot of what they're doing is they're bringing working capital to businesses. That's part of it, right? And I think that this is not tokenization for the sake of tokenizing. This is like adding real value to businesses or SMEs across the globe. So you have to bring the money in, and the truth is that some of those entities, or a lot of them, they need their money in that fiat space in order to come back and forth. We need to make it really easy. And we're seeing that more and more, but that's the importance of what's happening right now. And I think the overall timing of it is really critical for all of these things to come together. So they're fundamental tools, and they're coming together. They're here. And now it's a matter of real issuers coming in like they've been doing with Raze, and just building on that and bringing in some scale. And that's the point at where we sit today. It's not talk about scale. It's, it's able to happen is really what it is, actionable today.
Yeah, I remember just a few years ago, what you could do with your USDC was wait, like hold it in an account and wait. And obviously we've come further, and even looking at the Vaults site here, I think it's really interesting how, I know there's been a ton of work on the back end to make it look this simple, Brian, but it basically says connect your account, choose your jurisdiction, obviously, because that's very important, because you guys are probably doing all that work to make sure that whatever the user chooses, they're choosing compliantly. And then you basically start. And I think that is the level of simplicity that we need to get to, especially for mass adoption, institutional adoption, things like that. People just need to go onto these platforms and assume that they work. We're not there yet. And what you guys are doing, right, is definitely leading us towards that. I want to ask from your stance, Brian, like, what has that work been like for integrating with the XDC network? Why XDC network? And what are you excited about, I guess, with the relationship with the XDC Foundation moving forward as well?
Yeah, I mean, the integrating with the network was the easy part. It's EVM compatible, so that was a pretty easy checkbox for us, because that's what we built for. But it's everything else. It's building it for their ecosystem. It's building it for their targeted issuers that they have a massive global connection to, that are looking to bring these types of products on chain. Building it for their investor communities. Jurisdictionally, like thinking through all that stuff. One of the most complicated pieces of this is, people think that it's really hard to make tokens legal. That's not true. You can launch a security token tomorrow and follow the current securities laws in the United States and not have any problem, but no one will probably buy it. No one will invest in it. It won't be a good experience. Just because you tokenize something doesn't make that deal any better. So I think the complexity and the real hard work came in was working with Billy and team to sit down and go, what products is if we got to get the XDC community right first, right? What products does your network want? Who are your users? And the first assumption had to be, they have to be in USDC, so whether their liquidity in USDC right now on the network is 90 million or 200 million, and I know that fluctuates, but ultimately at the end of the day, that's the target audience we're going after. What does that liquidity want first? And then level 2 is branching outside of that. How can someone one day connect their bank account via Plaid, on-ramp their fiat, and a couple of clicks swap it to USDC and make an investment into this product? Is that possible?
Yeah.
And the answer is yes. We're very close. And when that unlocks, now you've got new liquidity coming onto the chain. So I think, to try to better answer your question, it was like we had to fully embrace both XDC's, kind of network narrative and network priority goals, along with our own, to make sure that the products we were building were going to work. I have a team member who's been in the kind of regulated capital markets for 35 years or so. And he's worked on-chain securities for 7+. And, he always says, like, don't just build it and they will come. Like, I think that's what crypto has done for a long time. And it's worked in some cases, worked really well in certain use cases. And in other cases, I think it's been a huge hype cycle crash because it was just moving liquidity from one side of the network to another network,
Sure.
and you're just moving money around. So what we wanted to do was purpose build for this network because it had to be a distribution versus just a technology stack to build on.
I think it's a super valuable point. And I think that what we see all the time in this space is like these general purpose things built because everybody else has them, so we should have them on our network. And it's like, yeah, and I totally agree with you, Brian. I think that what we've seen historically, and it does feel like there's been a shift, or we are in the process of a shift, I would say, for the past 18 to 24 months, where we're kind of moving beyond the chasing recycled liquidity between different networks. But I think what you guys are doing is absolutely fascinating to me. And, it brings up, like, I know about a month ago, I saw an article come out of the Financial Conduct Authority in the UK that was essentially what tokenization does to democratize access into markets. And I think it's going to be really fascinating because I believe we're headed towards a future where, obviously compliantly, people are going to be able to participate in whatever they want to participate in. So then it comes down to how much do you, just like anything else, how much do you trust the platform and how easy is it to use? So really, I think it's pretty fascinating. And I want to kind of walk through all three of you gentlemen here. And if I missed anything, feel free to flag it. But I kind of want to get some forward-looking statements for you guys. Max, I find that we're doing an interview with you maybe once every 6 months or so. So I'll start with you. What are you seeing from plug and play stance? What are you excited about from the Raze XDC integration? Why is this a milestone for plug and play to see these real world applications coming to XDC from the accelerator that you guys worked on? And I will keep rambling if you don't interrupt me. So forward-looking statements, Max.
So first, I think when we set out to work alongside XDC in these accelerators, the call to action was, the first industry-focused, real-world adoption type accelerators around tokenization. That was kind of like, the catchphrase. And, to now see this thing come full circle, where we've, worked with Raze while they were in our program, worked with the foundation and the broader team to now officially go live. I think that just, for me is a really satisfying moment to see, our mission statement be accomplished. The second, in terms of like the go forward or future facing kind of outlook, calling back to BlackRock. Larry Fink was recently in Davos, and he basically said something along the lines of tokenization is no longer optional, it's necessary. And so, if that's not a signal around the institutions coming, I don't know what is. And then, just speaking anecdotally from plug and play's perspective, like I mentioned, we work with about 600 plus large corporations globally. Over the past, I want to say, 3 to 6 months, I've received upwards of, call it 30 or so requests to do presentations on, what stablecoins, what tokenization means for these individual organizations, and some of which, are doing billions, if not tens or hundreds of billions in revenue. And they're asking us questions around tokenized deposits. They're asking us questions around how to, make their processes internally when it comes to money movement more seamless and cheaper. So, I think from that perspective, I'm really, really excited to have, like I said, a real world application where we can put this in front of them and say, this is exactly, the type of a future that we can envision, and it's here, and you can try it out and you can play with it and you can kind of explore all the different functionalities. without it being theoretical. And I think the crypto industry for the most part has longed for these types of solutions, because we've talked about all of the buzzwords, as it relates to the democratization of different markets, the decentralization, and all of this kind of seamless interoperability and composability. But now we can actually show that we have a product where they can feel that themselves. And so, just like with AI, over the last 10 to 20 years, people talking about all of the capabilities of AI, they didn't really buy into that until ChatGPT came out. They could actually interact with AI. And so that's kind of where I feel we're at in this kind of venture in the industry. And I'm just excited to be, alongside both Raze and XDC for the next chapter where we can start to prove this out. And so, I think those are kind of my quick thoughts on the industry and Raze in general.
Yeah. No, and even today, just as a sidebar, European Central Bank put out a press release, like literally today, this morning, that I caught, and they just approved DLT issued securities as eligible collateral. So there's these announcements are almost coming out multiple times a day right now. But Billy, I would love your thoughts on where we're at and where we're going.
Sure. Well, I'll kind of relate to something that from the past a little bit. And, there was a time when we were developing blockchain. Blockchain was all about building on blockchain. And a lot of talk was around, the trilemma, right? The blockchain trilemma. Can you have speed and security and scalability and decentralization? And that conversation really just kind of has quieted as what's happened in the industry is that real applications, real world utility is being built. Right? When I mentioned earlier this whole thing, I look at it as tokenization 2.0. I really look at this as this is we're now kind of in the tokenization trifecta. So it's not about what is can all of these things happen. These are the three things that are coming together, right? And it's trustworthy. Is it trustworthy? How you're doing this? The platforms? Do you have the risk assessment tools? Can you secure what you're doing? Are you able to attest to the base of what that actual asset is that you're investing in? Can you show it? Do you have auditable trails of what that is? These are all things that are being built now that are coming, they're like painting the corners of these blocks that have been placed with tokenization platforms. And is it beneficial? So does it add value to, what, the businesses are looking for? And I think that's really key. We're at a point now where we're really looking at, how, we can make something that's adding value. We can bring something to the market that's adding value. Those are the two of the most important functions of what this is. And then is it efficient? So are this is really, we're in the era now of capital efficiency. A couple of years ago, we were at a show, and I remember we were presenting on something we were doing around launching U.S. Treasury on our network. And that entire show, when we were at our booth, I don't know how many people showed up. Everyone's like, "Oh, we're doing tokenization. We're doing tokenization." It's kind of like, well, where were you guys last year? Because nobody was talking about this last year, and we had been working on it already for a few years. And now to me, it's it's not even really about the tokenization. That's happening right now. Now what it is can you bring capital efficiency to your network? And that's one of the things that these are all things that institutions need and businesses need in order to operate. So when you bring it together, that's, I think, really the key. That's where we're at. It's not we're going there, we are there. And we're seeing this happen in front of our eyes. It's a really exciting time for that. And so to me, that's really what we've been able to put together. And, like I said, now it's up to us to go out there and really start to bring scale to it.
I think it's interesting both from you, Billy, and Max's standpoint. And I've heard this a lot, like even through some of the other interviews I've done over the past handful of months with some the solutions integrators like PwC and Deloitte. And, they kind of sit in the middle and they're basically, saying like entities and enterprise institutions, they don't have to be necessarily told what blockchain is at this point. And now it's kind of about what problems can we kind of solve in the short term. And Max, you say you've got, businesses with multiple billions of dollars in revenue coming and asking you guys how you can help. I'm sure that's an awesome feeling for, after starting Plug and Play probably a handful of years ago. But Brian, as we ramp down here, forward-looking statements from you, sir. And yeah, thank you for joining today.
Yeah, I'll just compliment what these guys would say by kind of mentioning this is that every traditional technology adoption curve typically works like this. It's the hype cycle and the excitement, then it's the crash and the fear, and then it's the boring phase, and then it's global adoption. And I think we're in somewhat of a boring phase right now of adoption that's going on because we don't see any hype projects. We don't see any, the meme cycle's over. Thank God, we don't see, a lot of the things that we've seen in the past that get excitement. But I've spoken at two separate events actually here in Florida, and in both rooms were completely traditional institutional folks, family offices, VCs, investors, and you name it. A lot of founders as well of traditional companies. And all I did was talk about stablecoin adoption. That's all I talked about because they could relate with that and they understood it. And it took over a decade or so, maybe more, for Bitcoin to show up on the CNBC ticker and people take it serious. Now there's like whole cryptocurrency sections in those types of mainstream news sites, right? Same thing is happening across, what we kind of referring to, on-chain finance. And eventually it's just going to become finance. TradFi is going to merge with DeFi and it's going to just be, it's just finance. It's what finance is today, right? And so that's what I'm excited about is for the boring phase to become global adoption. And I think that we're getting there, but a lot of stuff has to happen. So I'm constantly looking at the stablecoin adoption number and seeing, how fast is it going up? How fast is it growing? And I think we've got to have more products like what we're putting together with XDC and Plug and Play to make sure that there are things that traditional folks can participate in, because right now crypto still has a bit of a reputation problem, but tokenization and blockchain doesn't, which is why all the institutions have already started implementing pretty mass scale.
I love that you say on-chain finance will just become finance. I've said this so many times. Like, I love how we come up with terminology in blockchain that everybody's supposed to care about, like Web3 gaming. Like, nobody's gonna be saying Web3 gaming in 2 decades. People are just gonna be playing games. No, but I really appreciate you joining today, Brian. Let me share some links here before we ramp down to make sure that I capture them all. And for those of you guys watching, please go to genfinity.io. You can read the entire Raze announcement here. This interview will be up here. We are in active remodel mode for the website. Raze.finance. This is where you're going to learn about Raze, kind of all-inclusive, the solution. You can get to the Vault explainer from here, the About section as well. App.raze.finance is Vaults. Give these guys a follow at Raze Finance. Huge shout out to the XDC Foundation at XDC Foundation, and huge shout out to Plug and Play at Plug and Play TC. That being said, I told you, gentlemen, it would be around 40 minutes, and here we are at 43. Hang out with me for a second while I ramp this down, and I appreciate you guys joining today.